Good morning, Paul Georgie from Allendale. It's May 2nd, Wednesday morning, and the big news overnight was the CME changing the trading hours for the grains at the Board of Trade. They are, as of Sunday, May 13th, the grains will start trading at 5 p.m. Central Time and trade all the way through on the electronic system, all the way through till 4 o'clock on Monday. On Monday, they open at 6 o'clock and trade to 4 the following day, and they'll do that from Monday through Thursday. So therefore we'll have trading through the reports and on any new USDA report that comes out. So that'll be a new experience for grain traders, and the CME is doing this in response to the new grain contracts that ICE is launching on the 14th of May. Traders also are coming back from their holiday around the world. That's seeing and putting some strength in the U.S. dollar. We're about 40 higher as we speak in the dollar. It's also pressuring the crude a bit. We had ADP numbers come out this morning, a bit negative for the stock market, and a little less numbers that show that employment is increasing. So we'll have to be concerned about that as we go into Friday morning's unemployment numbers. We also had 576 bean deliveries again overnight. That continues to push the May-July spread around and causes the May to lose some ground to the July. They expect that to continue here today, and spreading is going to be a major factor in the grain trade here over the next several weeks. Heading into the USDA May supply-demand report. That comes out on the 10th at 7:30 a.m. The big news there, the expectations anyway, using the acreage numbers that the USDA gave us at the March 30th date, we'll use those as in trying to come up with a balance sheet for corn, for new crop corn. The big question there will be, what will the USDA use for production or yield? Most years, in times where we've seen early planting, they have a tendency of increasing their yield or average production compared to their February outlook numbers. So that's going to be a key number to watch. And with those kind of numbers, the large acres and the big yield, you got to expect some extremely large carryovers. In soybeans, it's going to be the opposite. We could see numbers there based on their acreage and production. We could see some actually the lowest ending stocks that we've seen in many years. So that's and then when you look at all those numbers and you say, well, how did the USDA do on their May report? Were they anywhere close to the final numbers? In history tells us it is not a very accurate estimate that comes out in May, but it certainly will have an impact on markets, I think, and spreads as traders go into this report. Weather news, we've got rain coming across the Corn Belt here today, and for the next several days there's been some planting this week, and it's not going to certainly be as aggressive as we've seen last week, but we'll get some more corn in the ground and soybeans in the ground this week. Weather conditions pretty ideal for this time of year and ideal for the crops that are in the ground and growing. Also out of Europe, there's chances of increased moisture for Ukraine and Russia in the forecast, so that could put some pressure on the wheat, as the concern there is how much of a crop they expect this year. The cattle trade cutout values there were up slightly yesterday. Choice up 14, select up 62. Pork was down 18, however. But the problem that we've got in the cattle is that show lists continue to build here this week because of slowdown in production by packers, and now we've got packer margins in the black, so that gives them an incentive to pay a little more for cattle. But the problem is this is the first time they've been in the black for many weeks, and that is not a big encouragement for them to get back in the the red when it comes to margins. We've got more cattle to slaughter. We're going into a time where there will be a tug of war here again, and we've got to see an improvement in demand. We have not seen that cutout values again stabilized here. They're acting a bit toppy. Seasonally, we could see a setback here for a week or two. So look for some two-sided trade there. We need some improving demand news in the meat complex to turn this market around, and we're hoping to see that here very soon. Seasonally, we should be looking at higher prices here for a few weeks. So some tug of war there. Certainly a reason to stay in touch with Allendale's research, and we'll help you out and answer any questions you might have. Give us a call at 800-262-7538. And remind everybody, the Allendale webinar series has been announced, and you can go to our website, get signed up for that. The first webinar, I believe, is on May 22nd. So check that out on the web. We wish everybody a very successful trading day, and I'll talk to you tomorrow morning. Thank you.